We are, my friends. We are live with kind of an impromptu little live that we feel, Dylan. We're going to come live. What am I trying to say? We're going to go live every week on something like this. And this is one of those thoughts where Dylan and I are like sitting on the phone earlier this week. And we're like, wouldn't it be cool if people could eavesdrop on this phone call conversation, Dylan?
Yep.
Yeah. So talk to us a little bit about like what we think is going to happen over the next half. And even before we get into this, like, it's not just our experiences that we're going to be representing. Like, it's 200 plus agents as well, right?
Yes. And the leverage of as well the coaching program that we have at KWRC. We hear stories from agents every single day. You know, there's 80 agents that we're interacting with on a daily basis and hearing what's going on with them and their clients. And that type of information is invaluable because it gives you a snapshot of what's going on. And we're going to get into some of the stuff like the conversations that we've been having around the, no response to interest rates going up tomorrow. They're going to hold the same. And the collective groan that we heard in, we're in 4 different realtor WhatsApp groups. We're in like 5 or 6 different realtor Facebook groups. And you and I and the other realtors in that, we get so much added information from that. And it's really important that I think it's not that important, but it's important to us that we share that with people because
yeah.
It's a difference.
Yeah, absolutely. And a shout out to my good buddy Brian from Miami. And boy, do we wish we were there today. Minus 30-degree weather north of the border, Bryce. So thanks for
heat, Brian.
Thanks for reminding us.
Yeah, absolutely. So I think let's just start talking a little bit about what we're seeing in the market right now. A little bit of last year, maybe. I don't think we need to beat a dead horse about how crazy it is, but at the same point, there's a lot of people that don't know how crazy it is. They don't know what their home's truly worth these days. They see the prices, but they're not really seeing how much over asking they're going all the time. And we'll get into that down the road because I just had an amazing interaction with a client just this morning that had no clue when I was sending them the listing anything about pricing in their neighborhood. So it's important to have these conversations.
Yeah, absolutely. And if you're a buyer or a seller out there, we're happy in perhaps not today because as you know, this is ad lib as it goes, but we're happy to dive into some of those local areas and we will be sharing stats going forward. We will be doing all sorts of that kind of stuff and even doing it live. And I think, Dylan, it'd be kind of fun to also do like perhaps some live CMAs and valuations, to the best of our knowledge that we can do. But, the market from my perspective is my client's perspective. Right. Yes. And I think that's the conversation that we like to have happen and learn from not only each other, but if you're watching the stream today or you're watching one of the replays on any one of our channels, whether it's Dylan or mine, throw in a comment or a question. We're happy to circle back to it and provide, if we can, some clarity to it, right? And so forth. So let's talk about what homeowners perception is of the market, because that's kind of a loaded question, but let's talk about what that kind of boils down to, Dylan. Like, you were saying you just reached out to a client of yours that had been sitting in their home for a number of years, and they said that they're not 100% sure they know what the market is, and then you showed them, and they're like, no way.
Yeah. So this all came about as I was showing another buyer in their area. And a home happened to pop up on their street. So as a good realtor, I send them the email, check in how everybody's doing, let them know that, hey, one just listed on your street. And the response I got back was, oh man, they must be out to lunch. There's no way they're getting that money, right? And we had to have that moment of like, well, actually, that's a competitive below market value price that they're using to hold and get multiple offers. So they're really lower than market value right now, not higher than market value as you perceive, and it's going to go even higher than that. And then sure enough, when I followed up with the sale price of $300,000 more than what the asking price was, they were floored, just floored that was what was going on in their neighborhood. And I think now, even as sellers have known that the market's been really hot and it's a great time for them to cash in and they've got a lot of equity in their homes, we're at another point just in the last 60 days that we're seeing that drastic push of it's not even just the big prices that we were seeing in 2021, but we're reaching new stratospheres in certain neighborhoods where it really is record breaking. And not everybody knows that, right? Even realtors are trying to keep up with that because a new benchmark is getting set every day, right? And
Yeah.
I think it ties back into your experience, right? You were pricing your townhome, and you knew what had been happening in the market, but you weren't prepared for the actual result that came,
No, no,
right?
yeah, no, that's a
Why don't you
great setup. Yeah.
tell us a little bit about that?
Yeah. We listed a townhome in Innisfil, and that's 20 minutes north of Newmarket, which is, north of Toronto. And we listed it at, quite frankly, $25,000 below the highest price on the street. And ours was not as nice. That
Yes.
other home had a finished basement and some other things that ours didn't, although ours was just recently painted and new flooring and carpet and so forth. But, apples to apples, I felt the other home was slightly nicer.
Yeah.
We list it, and yes, we held offers for 7 days because that was the plan. And every day, multiple times a day, I got a call from a buyer's agent, and they're doing their job. So kudos to them. I'm not throwing anybody under the bus, but they asked if we would accept and look at a preemptive offer, and our plan was no, to stay the course for the 7 days. And come offer night, after 50 some odd plus showings, we had, I believe, 14 offers, and the home was listed for $699 and it sold for $900. And we were not to say we weren't prepared for that, but we couldn't.
Yeah.
There's no way that you or I, Dylan, could sit there 7 days prior, look at the comps, and say that's what the selling price is.
And
There's no way.
that's the thing that realtors, and I think everybody's experiencing, especially now, is that the competitive nature of the buyer, when they've got 50 people all looking to buy the same property, is that we see that somebody steps up and goes above and beyond to get that. And there's no way that you can predict that a buyer is going to be willing to do that when, like you said, your most recent comparable that wasn't out of date or anything like that was only $25,000 more than what your asking price was, and it was in better condition.
Yeah. And here's a few things too. If you're a seller out there, or an agent watching, or a buyer, perhaps more importantly, you're like, well, how can a home even be appraised at that value so much higher than the last sale of in the street? And as listing agents, Dylan, as well as anybody, that there's things that we can take, precautions, that we can take to mitigate that. And one of the questions, if you're a seller out there, one of the questions that I like asking every buyer, yes, we're getting firm offers, which means there's no conditions, right?
Yep. Yep.
The question I like to ask is, I know this is a firm offer, but are your buyers getting a mortgage on this property?
Yes.
And we chose an offer that we knew that the buyer wasn't getting a mortgage on the property.
That is powerful. Not so much the question, but the fact that somebody's buying that property without a mortgage, right?
Yeah.
And the reason why I kind of laughed a little as you were bringing up the question is because our classic question was, are your buyers conventional or non-conventional for their mortgage? Like, are they putting more than 20% down? That used to be the threshold. And now that's not even safe, because if an appraisal does come back below, you want to make sure that they've got 35, maybe 40% of that down payment in there in terms of the loan to value ratio, so that a low appraisal may not stop them from getting the lending because they have enough down that it's okay. It makes up for that gap.
It makes up for that gap. And as sellers, this might sound a little bit technical, or even for our buyers out there, I've been in similar conversations, I'm sure you have, Dylan, where, I'm the buying agent. Dylan asked me that exact same question. I said, well, yeah, we are getting a mortgage on it, but my buyers have, 30% down. They're going to be fine.
Yeah.
Well, then Dylan, right, you start doing the math. And if the home is sold at, we'll call it $1 million, for instance, to do easy math, because I like easy math.
That's how we like it.
And 30% down, obviously that's $700,000 mortgage.
Let me get the calculator around here.
Okay. Yeah. And if the home doesn't appraise at the purchase price, if it only appraises at $900, that means I have to pay another $100,000 in cash. I have to come up with $100,000, which now means, if you can stay with me on this, I'm not putting 30% down anymore for a mortgage. I only have a 20% down mortgage
Yep.
because I have to come up with that extra
That
100,000,
extra 100.
and that can change the lending quite a bit.
Yeah. No, it's very important to know that, and that's the tricky thing with as these prices, especially right now, where we're seeing big jumps in neighborhoods where there is no prior factual evidence to justify the prices that we're seeing. I had this very discussion with a client this week on a listing that's going live, and the previous sale just blew all of our socks off. And I'm like, guys, I'm so excited for you seeing that price now in your neighborhood. It's setting a benchmark, but I can't point to another house that justifies that sale. We're going to need a few more to pop off to guarantee that that is the new benchmark entry level into this neighborhood, because there isn't anything else to point to. And so even appraisers take a step back and say, like, hey, that's great that you wanted to pay that much, but I've got nothing that says that you should be paying that much, right?
Yeah, yeah, exactly. Exactly. I like it. So the $1 million question, why, and it literally is $1 million question these days, sometimes 2 and 3. Why are we seeing so many multiple offers? Like, what's going on? Like, you shared with me a stat earlier. You know, I love following stats too. Like the number of sales that we had last year. Like, it doesn't.
Yeah.
Like help us understand that a little bit.
Let's get into that, because that is an important one, because you're going to hear all the time, we don't have enough inventory. Low inventory is the challenge right now. There's too many buyers looking at too few opportunities to purchase, too few listings. And so that's why we see the competition, which then drives up the prices. The interesting thing to note, though, is we had a record-breaking year last year in sales, and it wasn't like a small record to break. It was a massive record. We did over 126,000 sales on the Toronto Real Estate Board last year. It was 126,700 or something like that. And I can't remember if I wrote it down, but the previous record was like 2016.
Yeah.
For
I got you if you don't have it.
Yeah, please do.
It's 113 and change, so 113 something thousand. Yeah.
Right? Then so we're up 26, I think it was that 26,000?
Yeah.
Yeah. Yeah. Anyways, those are the numbers from where we were. And that is a massive jump. Because even 2020, where we did big numbers, it's 26,000 more. There we go. That's why I've got that number. It's 26,000 more than the previous year, than what 2020 was. Right. And that's no small increase in actual units sold. And so we need to acknowledge that one of the big challenges here is we've got more buyer demand than ever. There's more people looking to buy homes. And the funny thing that sometimes the economists and the experts, when they're looking at predicting the market, is they're not seeing that, right? And realtors, as the guys, again, in the trenches, we see it right away. Our standard showing windows used to be an hour. You got an hour to look at the home, decide if it was the right fit for you, check out the property, check out the inside, look in the garage. And then that got whittled down to a half hour, because people you couldn't get all the showings in before the offer date. And then in the spring of last year, we saw that whittled down to 15 minutes. And then it happened again in the fall, and it's happening again now on a lot of properties, where you've got 15 minutes to get in there and take a look, because there's so many buyers that want to buy that one house.
Yeah. Yeah.
Right. So it's not just that listing inventory is low, it's that we've got a lot more buyers looking to purchase.
A lot more buyers. And this is taking a few things into account as well, right? There's been more inventory than ever before, yet we don't feel it because they're gone within, we'll call it 3 to 14 days.
Yep.
And in fact, there was a home on Main Street, Stouffville, where I live, and it had actually been listed for 3 weeks. And I remember getting a comment from a good friend of mine, like, man, that home's been listed forever. Like, well, it's actually only been 3 weeks, and then it sold.
We're at 23 days now.
Yeah. They were like, what's going on with the market? Yeah. And I guess in one hand you could say, yeah, it's double. It took double the time to sell it, but let's understand what's going on here. And the other comment too, Dylan, as you know, over COVID, last even 18, 24 months, our immigration levels were, always up here, and that's been halted because of obviously what we've been going on, or what's been going on around here. Yeah. So you imagine as that door starts to open up again, what that's going to do for buyer demand, which is going to be absolutely incredible. And the next conversation here is, okay, well, interest rates. Mm-hmm. We know that the government is and will raise up interest rates. And what's that going to do to the market? Mm-hmm. Kind of a loaded question. I don't know.
Yeah. And so traditionally, when you think as interest rates go up, prices come down, right? That's how we keep the balance on affordability so people can pay their bills and all their expenditures make sense. The challenge with that is right now we're still only talking about the Bank of Canada doing quarter point increases. And so now I believe prime's at what, 2.45, and prior to this it was, but prior to the pandemic it was 3.95. So we've got six more quarter point increases to go just to get back to where we were before the pandemic hit. And
Yeah.
so we need them to happen, but even the Bank of Canada is being very cautious because there's other factors at play beyond just the housing market for them to do that.
Yeah, well, and people have short memories too when it comes to
Yeah.
that type of thing, right? And for those that have their mortgage renewing this year, next year, really what we're seeing, and definitely from Benjamin Tall, who's the chief economist for CIBC, he's like, they're loving it because most likely they'll end up getting a cheaper interest rate than what they're currently in, even if
Yes.
even if rates go up ever so slightly over the next 6 to 12 months, right?
Yeah.
So yes, typically we could say, as interest rates go up, it slows the market or the buying demand down and the buying power. But as the last two sales that I've done, and I know the ones that you've been working on, it wouldn't have mattered anyways because there was no mortgage on those properties. And we're talking, a $900,000 purchase price and a $2.5 million purchase price
Yeah.
within the last month. So
It's
you can say
wild.
what you want. And
Yeah.
and the other thing too, obviously, and we'll get into this in future conversations, perhaps not today, how are my kids, or how are first time home buyers ever going to buy into the market? And we'll talk about stuff like that as well. And how the other question that I see a lot is how are people affording these $1.5 and $2 million homes?
Hmm.
And I don't know about you, Dylan, but the answer to me is easy.
Yeah. Which is shocking to say, right? It doesn't feel right, but it's happening, right? And I think the other thing you got to remember is the people that are purchasing those, they've been in the housing market for a while. They're coming with tons of equity in their property. That's where a lot of it is coming from. Not to mention, with this pandemic, there's a big section of the population, like retail and services, that got hit really hard, but there's a lot of industries that are flourishing, right? And so those are the guys that have the cash that are still doing it. And everybody else, if you've seen a $400,000 or $500,000 increase on your home value, well, that's equity that you're taking out when you go to make that next purchase,
Yeah,
right?
people are moving tremendous amounts of equity from one house to the other, and if they've got to, in a sense, start their mortgage over again. So if
Yep.
they've already been in a house for 15 to 20 years and maybe it's 5 to 10 years away from being paid off, they're not batting an eye at taking another 25-year mortgage.
Yep.
And that payment for another $500,000 for them or $1 million for them is really, call it what it is peanuts to them, because
Yeah.
they're probably dual income,
Yep.
making $250,000 to $500,000 a year together easily, and that's just where we live,
Yeah.
right?
It's the GTA. There's a
Yeah.
lot of money around here, right? There's a lot of opportunity around here.
It is.
I
And I
think
get it.
also,
There's probably people listening right now saying, I make a quarter of that. What are you talking about?
yeah.
But that's
Yeah.
the reality of it. That's who we are up against. If you are a buyer going up against other buyers like that, that's the nature of it. And I'd like to get your thought on this too. I know this is kind of like painting the whole picture with a big fat brush, but when I kind of look at the market in different areas for my buyers that I'm working with currently, if they're really not willing to pay at this moment about 110%, that's 110% of the asking price, you're not giving yourself a chance to own a property. Is that what are you seeing there? I know that's kind of a really blanket statement,
Yeah.
but
Well, yeah, I love that you say that it paints with a big brush, because it does, but that's my favorite way to paint. So let's do it.
yeah, I like it. Wait,
But
no,
I
there's a
think that that's
sound
also
effect somewhere. There it is.
got those dad jokes in there.
Yeah.
Anyways, I think that that's true. And what really, Jen and I have this conversation a lot with ourselves, with our clients, and then with our coaching clients when we're talking about evaluating pricing strategies, right? So you've got a new listing coming up. how do you know where to price it in the right segment for how much you want to get at the end of the day, and how low does that have to be to market value, right? And it does vary neighborhood to neighborhood. Like it used to be, in the city, it was 300,000 400,000 below what you wanted to get, or below value was where you should be pricing it. And up here was, maybe 100, 150. Like that was kind of a safe range, especially if you're talking in the detached market. And now that number is easily 300,000 for a lot of properties. And I'll shock you even more. We're seeing it be easily 300,000 in the townhome market,
Yeah.
where it's selling for $300,000 more than the asking price. And this is new. I'm just seeing this in the last 2 weeks, but that is a real thing. And you would have never guessed that, specifically in the townhome market previously, that was the amount over a property would sell. Right.
Yeah.
If we're removing percentages for a minute and talking actual dollars over the asking price, that's something that I can say that I'm seeing consistently.
Yeah, absolutely. And the townhouse market is always a good one to kind of keep your eye on, because that's the market that does well when the market's moving up. It also does well when the market's moving down, right?
Yes.
Because if I've got to sell my big 4-bedroom, 5-bedroom detached home for financial reasons, I'm buying a townhouse.
Yeah.
Right. And you kind of have this, like a two, I don't know, like it's like the hamburger. An accordion. That's it.
Yeah.
That's the word I was looking for.
I also use Caterpillar.
It's good too.
But it's my favorite analogy when looking at how let's look at the condo market, the townhome market, and the detached housing market, where we're going to see gains and where we're seeing that moves need to be made quickly. And I can tell you that we have this discussion all the time. And this is actually how Jen and I decided to make our purchase and our move last year. We didn't need to move from our townhome. We had enough space. It was just fine. But we were starting to see that gap grow between the town and the detached market. And we knew that if we didn't take advantage at the time, it was going to be harder for us to do it in the future. Right. And now what we're seeing is that the slinky effect. I don't know if I'm going the right way based on the way the camera's working, but that the towns are now catching up to the detached, because all of a sudden the detached went from, you can buy a good one for 1.4. Now all of a sudden it's 1.7, 1.8 or higher, again, depending on where you are. But that gap is so high for so many people that they have to go to the townhome market. Detached buyers have now become townhome buyers because of that gap, but they're coming with detached money, which is why that gap is growing, right? So how can you benefit from this is look at where those gaps are. And if we know that the townhome's pushing right now, what do you think is coming next? We're going to see those condos, right? Those condos are going to have a big push this year as they catch up for the next accordion or Caterpillar, however you want to.
And that's just it. And I always love this too. And I'm sure we'll say this over and over again, the stream and future streams is, when in doubt, you zoom out.
Yeah.
Right. And if you wanted a better picture of what's going on in the market, and perhaps just to put yourself at ease a little bit, don't look at the last 24 months and all of a sudden you see the market go like this, like a hockey stick. Like zoom it out and get a better picture of it. People have a short memory. As we said before, 2017, the market took a dip and it was about, some say it was about 18 months. I actually think it was only about 8 months. Because I remember doing a video that summer or that fall, actually, Dylan, for my buyers, because we had a few buyers that we were working with in 2017, and other people I was talking to. Maybe you remember this too, as we kind of led into the October month. They were waiting for the market to drop. Sorry, to hit the bottom, I should say.
Bottom. Yeah.
And when I looked at it and I started pulling the stats in, the bottom was July. They had already missed the bottom. It had already started coming back up, right? So I think if you're not talking to an agent and understanding the stats from a weekly basis at this moment, you're going to miss out on something again, right?
Yeah. No, 100%. And it's funny because how this all started is you and I are stats guys. We love watching the market. We love seeing what's going on. And I've got that Excel sheet that I'm sure will make an appearance at some point on one of these shows, where if you remove the year of 2017 from my line graph, as it shows all the years of real estate go, all the average prices, from 2016 to 2018, absolutely normal growth. Just as you would have expected, all you lost was that 1 year of 2017, right? And so that's how much of a blip every time there's a challenge in the economy or the market in general, the GTA housing market is just a blip, and then it's back on track. Like we saw 2018, sorry, we saw 2008 financial crisis. How quickly that passed us by here in Canada. By the fall, I remember again talking about how agents see it right away. We were seeing tons of showings on our properties. They stopped overnight. No more showings. Then by June the next year, that was in like September, October. By June the next year, best June on the history of the Toronto Real Estate Board. So it's the dips haven't lasted here in our housing market like they used to. And
Yeah.
I love that you guys talked about that on the office meeting yesterday. Is for you guys that have been in the business 35, 40 years, what's going on with the regular real estate cycles? Do they exist?
Yeah. And we should talk about that because there's a really great book out there, The Canadian Real Estate Cycle, and it talks about it, being basically a clock and where we are in the clock. And it's just like any market. And it was mentioned yesterday too, and we'll talk about it here. Sometimes that clock works really quickly, and other times it goes really, really slow, right? And it just depends, of course, on other factors like our local economy and the finances, and quite frankly, the leadership of the local government and provincial and federal. That's when you want to combine the two, provincial.
Yep.
Yeah. Yeah.
Well, we need them working better together.
Maybe
so.
You know what? Maybe that's a thing. Yeah, that's a thing. We should work on that together. Yeah. And in different areas too, that real estate cycle or real estate clock works much faster in the different geographic areas as well. And we're right now, we're at the height of it. We're seeing pricing, we're seeing everything. And what we know from every clock, and we'll talk about this, I'm trying to do it by memory, is there's a slump right afterwards. Mm-hmm. And as you just pointed out, sometimes that slump takes a while and sometimes it's pretty quick. Yeah. You have a slump and then a recovery and then the build and then the height of it again. And it's really, really interesting. Maybe for next week, I'll bring that up and we can kind of talk about it. Yeah.
I like that. I think I'm really looking forward to having more of these types of conversations because it's just so beneficial and it's great for other people to hear them happening, right? And see what we're talking about as it goes on. I think before we wrap up today, one of the big ones that we should talk about is where do you think the market's going? Like in what's happening in the next 6 months?
Yeah. Toronto real estate market.
Yeah.
Yeah. That's where you and I trade the most and bits into Simcoe and so forth. But, here's what I know. Regardless of interest rates and everything else, the buyer demand is at an all-time high, right? That's still, as easy or as a cop-out as this sounds, it's a supply and demand. If there's only one house to buy in the street and you have 50 buyers coming to look at it, what does that tell you?
Yeah.
Right? And when a portion of those buyers don't care about the interest rate, what does that tell you?
Yeah.
So I don't know, Dylan. Like obviously the moral of the story, or at least the way I'm seeing it, is we need to create inventory, and that will slow the market down a little bit. But we're not even creating enough inventory to keep up with demand.
Yes. Yeah. I think that's been one of the things that the realtors in general and our boards and organizations have been preaching for such a long time is we need to get the government on board with getting homes built faster, right? That's one of the first challenges. And we don't need to go into that because this video will go on forever. But to talk about, where I think it's going, you couldn't have said it better. Like we're just seeing too much buyer demand right now with interest rates still low. I don't see this going away. So what this means for people is if you're planning on making a move, I think it's important to make it as soon as possible. I think every month earlier that you make it, you're potentially saving or making yourself an extra 50, 60, 80, 100,000 in equity by just doing it sooner, especially if it's a move up, because we're seeing our top markets make the biggest amount of growth right now, those top segments. So I think doing it as soon as possible makes the most sense. And ultimately just make sure this is a standard rule for any time. Do your buy and sell in the same market, because then it's all relative. Accidents happen and people get hurt when you try to time it just right and don't buy or sell in the same market. That's when you're going to end up in trouble. If you do it in the same market, it's all relative. This goes back to a conversation that Jen and I had just last night, talking about if we didn't make the move when we did, how much harder it would be for us to purchase our house today. But the flip side of that is our townhome would have sold for $400,000 more than it did. So we would have come with an extra 400,000 of equity. Like, would it have been that hard? No, because it's all relative. Like, there, because of the growth, the gap is maybe. Actually, here's the funny thing. If you're in a townhome, do it today, because today the townhomes have caught up to the detached more than ever before. Just, I'm talking specifically in the last 2 weeks in markets that I'm in. This might not be your market, but what I'm seeing is massive growth in those townhome markets because a lot of buyers got priced down to the detached one. They're coming down with detached money into the townhouse market, and it's closing that gap just a little bit. So really, like, that's my message for today. If you're in a townhome and you've been thinking about making a move to the detached, do it today.
I like it. I like it. I like it. I like that. I think you just coined a new phrase.
Yeah.
Detached money.
Detached money.
I like it.
Oh, I love that detached money. It's
right?
almost as good as that crypto money.
Yeah, the DeFi money. I don't know what all this stuff. I don't know what it means, but it sounds good. Yeah. Detached money. There you go. And maybe if you're a buyer, that's you're labeling yourself. I got my detached money. I'm coming in now.
Yeah, 100%.
Yeah, good stuff. Good stuff. Yeah. So going forward, Dylan, like you and I talked about like putting some stats on the screen and so forth, and digging in and opening up, the access that we have to the Toronto Real Estate Board and other boards to kind of show people properties and more importantly, yes, stats and numbers, they tell a story, but they help us, they help guide our agents. And I know many, our clients, clients are always looking for somebody to lead them through this process. And the more information that you can arm yourself with as a buyer and seller, the better it is. And that's really what this weekly stream is going to be all about. We're gonna have some fun. We'll pull up some news articles and talk about them and so forth, and see how that affects your local market and decision making and all sorts of stuff. So that was good, my friend. All right.
Yeah, that was awesome. I'm glad that we whipped this together on such short notice. And Gary, I look forward to talking to you next week.
Sounds good, my friend. So we'll see everybody next Friday, 1:00, and we'll have some fun stuff for everybody. We'll see everybody next week. Bye for now.
See you next time.